Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Tuesday, September the 7th, 2010. I'm back from vacation. The market's back open, and it's time to look at the markets. Okay, let's start looking at the Dow Jones Industrial Average. Today, she was down 107 points for the day. Uh, on the Dow Jones, it's not quite confirmed itself as being the end, as you didn't have a bearish engulfing here. But you'll notice a couple of things right off the bat. First off, you're really close to the overbought condition of the slow stop, so any move to the upside there would just be a short opportunity by the market. So you don't want to be trusting any moves to the upside. Definitely don't want to be buying here, as you're no longer in the oversold condition down here. You'll also notice you're ricocheting right off of the 200-day moving average. We've been talking about that for a while now. When you're in a bear market, the 200-day moving average is the price where price will stay below the 200-day moving average, and if it bounces above it, it becomes an easy short. So now you're bouncing at it, or off of it, I should say. You see right here. So nothing bullish about this market whatsoever. Volume activity today was slightly better than Friday's volume, but nothing to write home about. But again, we already have the volume is in favor of bears. We'll show you that on the uh, NASDAQ in a minute. But the main thing here is just to keep an eye on the fact that you can still see a little bit pushed to the upside here by the market. But again, that would all be a short possibility, an opportunity. Moving on. One more item you have to note about the Dow Jones Industrial Average. You do have a potential here for another head and shoulders formation. You had one here setting up like this. All right. Get rid of that. And now you've got yet another one. Could be setting up a bigger one right here, here, and here. Okay, so keep an eye on that. That will be a sell signal as well. Quick look here at the Hang Seng Index. You can see we're hitting resistance at the upper Bollinger Band line. Now hitting up into the overbought condition of the slow stodge. Any move to the upside here would just be a short. There's nothing there to look for on the long side. It's only short potential here in the world markets. So keep that in mind. You're going to have more and more reason to look for a sell-off again, like we talked about. I think it was about a week ago. We do have this downtrend here, which is corresponding low points here and here are showing an uptrend, which we said before is false. You're going to break down below this level, so be looking for that to happen. Okay. Quick look here at the FTSE London Financial Times Index. We told you last Friday you were already at the overbought condition of the slow stop. Should be looking for shorts there. We're already at this level, at this level, so we're not going to be adding. But you can see that if you haven't had the opportunity yet to short the FTSE and we're looking for an opportunity, now would be that time. Any moves to the upside would just be more reason to short, not buy. Definitely would not be a buyer of this market. You are overbought by all stretches of the imagination. Okay, quick look at the NASDAQ. This is something you got to pay attention to. You'll see it on oil chart. You'll see it on the S&P, the Russell. They're all bearishly engulfed. That basically means today's price activity closed below yesterday's low and the body and everything else. Just bearishly engulfed all of this. So that's very bearish sign right there. You also notice volume did the same thing. That's a confirmation of it. And again, up here at the overbought condition, no reason to be a buyer of this market. You can still fight a little bit to the upside. I don't ever try to call the exact peak. I mean, you're going to still see little kicks here and there, but the end result is there's no longer any reason to believe in a bounce. It's been alleviated, so your move should be lower. But also note this is a continuation to the downside, today's candlestick formation, and that's more reason to be a seller. Something else to note, some of you guys may not know this, note the low point here, followed by this low point higher. This one's higher, this one's higher. This continues until a low point gets taken out, all right? Low point here, and then you get a lower low. Once you have a lower low, that's basically the market's way of telling you we've given our best shot, that's what we've got. You can still see some blips to the upside, but the end result is a rollover and breakdown. So now you've got this low point, this higher low, higher low, higher low, lower low, okay? Markets just told you that's all they had. All right. Also note, whenever you're looking at a bearish engulfing, make sure your volume confirms it. Volume is bearish. It's greater than Friday's buy volume. That confirms the bearish engulfing. Always double check with the volume. Here's our chart on oil. You'll notice again up here at the 80 line, once you get above the slow stocks, you're showing overbought conditions. Short term, you start looking for the rollover. You start looking for the short opportunities, so forth and so on. You've also got the bearish engulfing, the series of lower lows. You do have a little support here at the 50-day and the uh, middle Bollinger Band line, so your market could bounce around here for a bit, and maybe even tick up to the upside a little more. You've seen that happen before, where your slow stocks will do this kind of a number like that. All right, you can still see that again, so don't just jump all in. Start to leg into your short positions. Don't just dedicate everything you've got in one fell swoop. All right, that's important to note. Be smart, trade smart. Before we go on, I'd like to reiterate, I am not short oil. There's just too many catalysts out there, war, etc., that could cause price of oil to spike, even though your economy is going lower. So I'm not going to be long or short oil in this market. Quick look here at the Russell 2000 Small Cap Index. Yeah, she's there. 90, okay? 80 is overbought. You're at 90. Do the math, okay? You've got the bearish engulfing, all right? Very strong there. Lower series of lows, right? Lower series of highs, right? All very bearish. Still got gaps down here to fill. Got to erase this one now because it's covered. All right, and again, we talked about this before. Bearish divergence remains in effect on this average until the 587.67 low is taken out. That's right here. It's not taken out yet, so we're going lower. You look for this thing to break down, fall apart. Okay, very cool. The S&P 500, same old story. Boom, there she is. Okay, you know where to start adding right there. You got the bearish engulfing, lower series of lows. Okay, you can still have a little bit of bouncing around. We've got some supports down here, some weak supports, but the ultimate story is we're going to break down and go lower. Quick look here at the VIX for confirmation of the market analysis. If your markets are overbought, then your VIX should be oversold. And what is that? Oh, what is that? Oh, that's right. It's oversold. Oh, wow. Look at that. Awesome. Okay. Yeah, be looking for the market to be rolling over. It's going to have some glass ceiling above it. It can still move to the upside. It's not a issue of, is this the exact peak? You never try to do that. If you do that, it's called overtiming. You don't want to be doing that. I would use any move to the upside in the markets as an opportunity to find short opportunities or long opportunities in an inverse ETF. That's kind of hard to say. All right, if you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, refer a friend. Also, please subscribe to our YouTube channel. That helps us stay free. We appreciate that support. Thank you very much. A quick look at our disclaimer. The disclaimer, read it and weep. God bless. Take care. I'll see you all tomorrow. Also, for those of you who do not know, we started today in our September live trading course. You can go there, check this out. This week we're going to be adding to our positions, finding new opportunities in inverse ETFs and short positions, this and that. You can go to our free website and check that out, our top picks and so forth and so on. Look forward to seeing you there. God bless. Take care.